The Euro US dollar is about to make the next major 1000 to 2500 pip move. And I will explain to you in this video why that is and how you can take advantage of it. Let's first look at the last situations where this was the case. In 2021, here we are in the weekly chart, what we saw was obviously a very large downtrend of 2600 pips in the span of a year and 4 months. It was indicated as well by the divergence. And when we look at the RSI, which is this part, we see that the derivative price change decreased while it made a new higher high, indicating lost momentum. And then after it broke this latest higher low, it was very indicative of a downtrend. I know that it doesn't look overwhelming right now, but when we look at it in the daily chart and go back to where it happened, you can see that there's been a lot of opportunities to enter. We saw the weakened momentum that happened here. It broke the resistance level at least here, and it pulled back to just go down again. So this would have been a nice entry with a stop loss after this candle of 130 pips, and you could have taken the whole trend until trend changed, indicated as well once again by not only the oversold levels on both indicators, they were there before, for example here, but by the new higher high, which was made then here and here. So this was basically your ideal setup. You could have profited a lot from it. But hang on a moment, we will soon talk about what the current opportunity is. But let's look at another opportunity as well. Because when we were here in 2024, we saw a large downward movement of the market. This is the weekly chart again, so this is 1000 pips. When we look at the daily chart, we see again a weakened momentum that happened before. It makes no higher high, which is an indication of itself, and the RSI goes down by a lot. Then it breaks the last resistance, pulls back, and then breaks out to the downside. So at this point, the trend has been confirmed, and it once again makes a downward movement, and you probably would have taken your profit in the oversold level. So this was another lucrative opportunity. But as you probably know if you watch my channel, the best trades are actually made not when you enter in the daily chart or based on the weekly chart or anything like that, but instead when you enter early, ideally, and you have a tight stop loss. So you could have timed your stop loss actually in the hourly chart, and you would have probably 5x, maybe even 10x your trade, because your risk was 5x or 10x lower. Another big opportunity here was when we draw a trend line, which is more of an art than a science, like I like to say, but the trend line broke and it made a new higher low, and then the resistance of the last higher high that was made broke as well, with much volatility in this direction. So this was indicative of an upwards trend reversal, and here was where the real profit lied, because look at this tight stop loss, even in the same time frame that we're trading the chart on, and you would have exited probably at oversold levels and then the candlestick confirmation. So this would have been around here, and in just a few days you would have made twice your risk multiple, which obviously is great. I mean, who makes, let's say, if you risk 5% per trade, who makes 10% in just a few days? Because every candle here is just a few days. And the beauty of this is that the trend continued. You could have waited for reversal signs that the overall direction of the market actually goes down, rather than just selling on the oversold level. But it's important that you have your consistent exit routes if you apply the same strategy. Otherwise, you're lying to yourself. I've made a video about this. Check it out if you want to. But that's always an important thing to do as a trader. We will now talk about the next opportunity in the market. But before we do that, why don't you like the video, subscribe to the channel, and write a comment on your thoughts on these previous last, well, 3, I guess. I only planned 2, but this were now 3 cases, and how you kind of would have profited from these movements. Now moving on, you can see I've already written this here. The euro currently has an interest rate of 2.4%, and the US dollar has an interest rate of 3.62%. Why am I telling you this? Well, when we look at the weekly chart, so this is a long time, 2020, this is 2026, obviously, then every single large move of the market obviously was driven mostly through fundamental factors. the higher the time frame, the less technical factors really matter. It's not entirely true, there's much nuance to this, but this is going to suffice for my argument that I'm about to make. Because in the last two cases, think about it. This last major uptrend after the trend reversal, what happened here? Well, let's look at the date. It's January in 2021. Trump was elected. The euro, in this case, appreciated against the US dollar, probably because of worries by international, probably not American, but international investors who thought, all right, if trade goes down with the US, currency is going to depreciate. And obviously it did. Either because the US dollar was less attractive internationally, or maybe because investors just thought it was. Whatever the case is, the euro did appreciate relative to it. But now we are entering a phase where the euro actually has a lower interest rate than the US dollar. And central banks, as you probably know, do this mostly to control inflation. And there's many factors into this. They look at the employment rate, for example. They look at how strong the economy grows. And in the case of the euro with the EZB, they actually don't have a really clear policy right now in place. They're just saying we will see how it looks. And so they are 2.4%, and the markets actually expect the policy to stay at around 2.4%. And the US dollar, on the other hand, may even increase the interest rates further. And even if they don't, as long as the interest rate of the US dollar remains higher than that of the euro, then we will see very much downward pressure, because this is a whole percentage point. This is a lot of money for institutions that have a lot of reserves. And interest rates in general are the key driving factor behind currency exchanges. It's also trade, yes, it's also economic growth, but it's always interest rate, because interest rate also encompasses all of that. It's supposed to control for much of that. So in general, what to expect? So therefore, in general, what to expect? I expect the market to go down. I can't tell you to what level, I can't tell you how big the movement is going to be, but because it is such a fundamental driver, I expect it to be as big or bigger than the last cases where there was a fundamental driver behind. So this was 1,500 points in the last time that Trump got president, and therefore it may be something similar. Now, looking at the technical aspect of it, we actually see a ranging market, first of all, to which you might say that there's not a good entry opportunity here. But I agree with you in general. We have to point out that after the middle of April in this year, so that's the last 2 months, there's been a downtrend. We see this with a RSI that's below 50, and we see this with a stochastic oscillator that indicates that the price more and more trends towards the lowest range of the last, in this case, 9 candles. So this is a downtrend in the short term, but it hasn't yet broken this resistance, or this resistance. There's resistance right here, that is right, but because of the fundamental downward pressure, I expect the market to go further down again. But it gets especially interesting when we look at it from an hourly time chart, like this. This is the 4-hour chart. As expected, as a trader, you will probably notice markets tend to move in just a few hours of the day, and then quite abruptly, like here. You can see this really well. And when the market did break out in the direction that we were expecting it to, the market pulls back again and retraces, just to go back to the level it broke out to then break out even lower than before. This is just price action. I'm sure you are familiar with this. There's a lot of strategies that you can build around this as well. But now, at this point, it obviously bounces back. It is expected to do this because there's a resistance zone right here. But the reason that I don't want you to miss out on any of this, the reason that I put this in the title of the video, is that look at the last time the market broke out and retraced. You could have had such a tight stop loss of just 30 or 40 points. If we draw a box around this, this would look something like this with a well-timed stop loss, and you would have made already something like 1, 2, 3, 4, 5 times your risk multiple. And I believe this is a great opportunity that we have ahead of us, because if the market not only moves like we have seen so far, but moves further down, then when you enter in the hourly time frame, you profit from a 500, 1000 or 1500 pip movement with a stop that is actually not greater than 50, and in this case even just 30 pips. So what I advise you to do is, of course, first of all, play it safe. I don't advise you to do anything. This is not financial advice. Everything that you do is at your own risk. But my opinion and what I will personally do is I will wait for a retracement either in this situation or somewhere else, and then I will ride the longer term trend, except for when I see contra indications of the trend. But this means that in this case I would have already made 5 times my risk multiple, which can be 25% if you risk 5% per trade. So riding the trend, tight stop loss is expected to move 500 pips or 1000 pips because of this underlying fundamental factor. I think that is a very sensible thing to do. Of course, we will have to see how the market develops on Monday. You're probably watching this on Monday anyways, but we don't want to miss out on what is to come. With all of this in mind, go ahead and write a comment on your prediction on what the market is going to do and what you think is the smartest move to make in this situation that we're in right now. And if you haven't already, then like the video and subscribe to the channel.